Silver is really incredibly mispriced. I mean, if you look at what happened versus other metals back from 1980, it's the only major metal, even if you look at some specialty metals and right across the board, that is below its 1980 high. Gold, base metals, platinum group metals, some of the rare earth metals, they're all way above their 1980 highs. Silver is the only one that's in fact less than half of its 1980 high. That's one measure. If you look at inflation adjusted prices, still silver is something like 90% below its 1980 high. It's just a very, very bullish setup. And then, we can get into things like industrial and investment demand, but silver really is very much unlike any other metal. If you look at the fact that it's both monetary and industrial, it's about 50-50. And I think both of these sides of silver demand are going to explode in the next few years. So there are just so many huge drivers for silver going forward. It's about 55% of the silver demand is industrial, and so the balance 45 is what I consider some sort of investment. So it's things like actual investment, people buying physical silver to hold, things like jewelry, silverware, and so if you add those together, in my view, as I say, they're kind of some form of investment. So it's about 50-50 roughly overall, industrial and investment demand. And so half of the silver supply every year is consumed. If you consider that half of it goes to industrial, it's true that so there's about 1 billion ounces of supply every year, just roughly, of silver supply, and about 15 to 20% of that comes from recycling. So naturally, some of the industrial demand or use does come back into the supply. But a really interesting note about silver is that only about 28% of silver supply comes from what we call primary silver mines. The rest comes from mining other metals, comes from mining gold, copper, lead, and zinc. And so silver is highly dependent on the production of those other metals. And if you get perhaps some kind of a slowdown or not, silver, a lot of, as I say, about more than 2/3 of silver supply depends on those other metals. So if the price of silver goes up, demand for silver goes up. Unless the production of those other metals goes up at the same time, you're not going to get more supply, or at least limited, since, as I say, about 28% comes from primary silver mines. And besides that, I mean, silver is also the most conductive metal. That means that it conducts electricity better than any other metal. It's actually, that's measured on a scale up to 100, and silver is the standard. Silver is the 100. Copper is, I think, a little bit below at 95 or 97. Gold is, I think, a little bit below that. And it's also the most reflective. It reflects 95% of light. It's the single most reflective substance. And if you look at what's happening on the demand side, I think really you can't deny that solar over the next years and decades is going to be a huge driver for silver. The fact that it's highly reflective and conductive has a lot to do with silver being used in solar panels. But right now, of overall demand, silver is 12%. And if you look at overall industrial demand, it's more than 20% of all industrial demand goes only to solar. And so this big green energy shift, I think, is going to probably at the very least double silver demand over the next 8 to 10 years. And you've got all sorts of other, projections. The International Energy Agency saying that output from solar is going to be something like nearly 9 times what it is today, just in the next 8 years. And then you've got the Inflation Reduction Act in the US that is very, very bullish for silver. Something like $320 billion over the next 10 years is going to go towards solar. And then you have technologies in solar panels where the next technology is supposed to require about 50% more silver, and the technology to follow on that, something like 150% more silver per panel. So it's really a very, very bullish outlook. Silver's been a great hedge against financial repression and against inflation over over millennia. It was the first truly international currency. It's always been an inflation hedge since then. If you look back, I did the math. I went back and looked at the last 100 years, for example. 1922, silver sold for 60 cents an ounce. And if you use the official rate of inflation, just over 3%, let's say average annually per year since then, silver should be at about $11 an ounce. And today we're at just under 20. So silver has more than doubled official inflation rates, and probably is a lot closer to a fair return on what is real inflation. So over time, it certainly really does retain its value. If you look at what is happening with commodity prices, well, the reason that I think we're going to see silver really play out with much, much higher price levels over time is that commodity prices will continue to rise. There's no question that we're going to remain in what we call a negative real inflation, a negative real rate environment. So inflation, despite central banks talking about and raising rates, net rates are going to stay below zero, and that's going to help keep commodity prices buoyed and eventually rising. I think we're in a new secular commodity bull market, and that's going to eventually get people to lose faith in currencies when they see that for an extended period, their money just simply buys them less and less and less in a more obvious way every year. It's one thing to deal with 2%, 3%. You're dealing with 7 or 8%. It takes something like 8 years or so before you lose half of your buying power. And so, precious metals have always been a hedge against inflation. People are going to return to it in a big way when they see that this is the one sector that has been outperforming. And, stocks and bonds have really taken it on the chin since the start of the year. Both are down dramatically. I don't think either of those sectors, the 60-40 portfolio, I think is finished. And neither of those is done falling. And commodities and precious metals in particular are going to hold up well. So the general investor is going to clue into that. They're going to start flocking to that sector as a hedge. And, if we look at, my long-term target for silver is that it could reach as high as $300 in some sort of especially in a speculative mania. And I get there different ways. So, and I detail these in the book. One of them is if I look at the gold to silver ratio, and the ratio bottomed at 15 in 1980. I think the ratio is going to get at least close to that at the peak of this current bull. And to get that ratio, you have to divide gold by the silver price and tell you how many ounces of silver it takes to buy an ounce of gold. And so my longer term view, conservative view of the gold price is that it'll reach about $5,000. You have some very highly regarded analysts that think it'll easily reach as much as 10,000. But if we go with 5 and the ratio drops back down to 15 to 1, so 15 ounces of silver to 1 ounce of gold as it did in 1980, then that would mean a $5,000 gold price at a ratio of 15 would mean $333 silver. And so, you could, as I say, some think gold will go up to 10,000. In fact, I'm starting to lean that way myself a lot more in the last while. And so even 10,000 at a higher ratio of 30 to 1 would still get you to $333 silver. And there are several ratios that I use and that I examine in the book. Just one other one is the average U.S. home price to silver. So the number of ounces of silver it takes to buy the average U.S. home. In 1980, that was about 1,460 ounces of silver. And if you take the average home price today, which is say about $450,000 U.S., and you divide that by, round up to 1,500 ounces of silver, you get again $300 silver. So I go through these. There are about 4 or 5 different methods that I look at to forecast a silver price. And when I started doing that research, they all ended up pointing to somewhere around $300. And so that that target to me started to take on, more importance. And when you're forecasting, sometimes I laugh at some financial forecasts. I see, interest rates are going to peak at 4.7%, or GDP is going to be 1.2%. I just think, being that specific is laughable. And so, $300 silver is as good a target, I think, as any, at least in my case.